Did you see the stock market this week? It's insane. Maybe it's time to finally dump all my savings into Nifty 50, right? Hold on a sec, Tiger. Before you go all YOLO with your hard-earned cash, let's separate the market myths from the money-making moves. This is Profitable Trading India, and today we're cracking the code of the Indian stock market. So, the elections are over and everyone's hyped about investing. But listen up, the Nifty 50 might be at a peak, like that crazy office party that ends with a hangover, remember. Don't get me wrong, long-term investors keep those sips rolling. But short-term players, buckle up, a small correction might be on its way. Now let's build your dream investment portfolio. Imagine you have a cool 10 lakh rupees to spend. Think of it like a shopping cart, but instead of chips and salsa, we're grabbing solid stocks. For the short term, think 15 to 20% of your cart. We want reliable brands, the blue chip heroes like Reliance, Adani, the HDFC gang. These guys are the anchors of the market, not some fly-by-night fad. But here's the secret weapon, the PE ratio. Yes, you heard it right. It's like a stock's price tag compared to its earnings. Think of it as a value meter. For our blue chip buddies, a safe zone is a PE ratio between 20 to 25%. This translates to a sweet 12 to 13% return annually, perfect for cautious investors like us. Hold on, a word about those business news channels. They're like those flashy car commercials, all hype and no real substance. Don't be fooled by overhyped stocks they promote. Trust me, you don't want to be the one left holding the empty bag when the music stops. Do you really? And here's the real deal. For the long-term game, think 3-5 years, master the PE ratio. Don't just chase that 25% growth rate blindly. The market might be taking a breather, like waiting for the next season of your favorite show on Netflix. Look for hidden gems like Tarson products, stocks that have dipped and are ready for a comeback. And forget about those stocks everyone's raving about. They've probably already had their moment in the sun and moved up already. You should focus on stocks with potential for short-term gains, like finding a hidden sale at your favorite store. It's like a stock's price tag. Now, what about those profits you've made over the past year? Feeling tempted to cash out? Here's the plan. Let's say you invested rupees 1,000 in Nifty 50, and it's now rupees 1,500. Take a victory lap, you deserve it. But consider taking 10 to 20%, max 25% off the table. Now let's reinvest those winnings in undervalued stocks or explore other options like real estate, bonds, or even a little crypto spice. Diversification is key. So there you have it, folks. The Indian stock market doesn't have to be a mystery. With a little knowledge and a dash of caution, you can be a market master, not a confused mess. Remember, investing is a marathon, not a sprint. Don't rush in blindly, keep those sips flowing. Book profits strategically and reinvest wisely. With the right tools, you can conquer the Indian stock market. Like and share this video. Hit that thumbs up button and subscribe for more profitable trading tips. And leave a comment below. What are your biggest challenges in the Indian stock market? Let's chat. And always believe in real mantra. Bhavisi ke liye nivesh with Profitable Trading India ke saath ek alg sukun ka vishwas.